Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about volume profile, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
I was going to ask, so the pullbacks, I noticed they don't all look the same. So I was wondering, do you have a certain pattern that you look for? Is there like a,
No, it's
uh-huh.
totally unknowable. In other
Okay.
words, when's it going to happen? How big is it going to be? I have no idea. All I
Yeah.
know is that there's a pretty good chance that when it does pull back, it's going to interact with those levels. That's all I know.
Okay. And the pullback happening in a volume node or a well, it doesn't matter which one. It doesn't mean it's like stronger than the other one, right? It's going to pullback's going to happen wherever it happens. Is that how
Right.
that works? Okay.
Yeah, and it's like in some sort of physical universe, and it's going to react to the physicality of that universe, right? If you're inside of a node, you're constrained by the higher volume and liquidity in there. You're now in mud and trying to trek through
Right.
it, or you're on a mountain and you're trying to trek through it. When you get into the well, you're like on the plains and there's nothing giving you constriction. You're freely moving. Maybe you interact with a little divot here every once in a while, but you're freely moving. So just think of it as on a physical plane. It is like
Right.
mountains and plains.
Okay, no, that makes sense. And since price action is fractal, is there a way for us to even work the volume profile on a lower time frame and congruent with the volume profile in a higher time frame? As in, for example, if we're looking at the all-time high node at the very top, maybe we can zoom in on the 1 minute to see how it's interacting even more, or is that irrelevant?
It's pretty much irrelevant because
Okay.
even though it's fractal, you're not seeing the effect of all of the volume, right? If you're discounting
Mm.
the volume, you're getting only part of the story.
Okay, so what if you use it incongruent with the volume levels that you've already marked up on the higher time frame, and then you use the lower volume profile on the lower time or in the lower time frame
No, I'm
incongruent with
just
the
saying
higher?
a profile that is not showing all the history is only
Oh,
part of the story.
okay, I see. So it's only calculating that time frame, not everything.
Right. But it's not
Okay,
just that. It's just not as reliable
right. So then I
because
guess my I
because
go ahead.
the institutional traders aren't thinking on a day-to-day basis like you're thinking. They're bigger picture.
Okay,
The big money is much bigger picture.
interesting.
So that was the initial mistake that I recognized when I was first studying market profile way back in like the early 90s. And they were focusing almost exclusively on session profiles. In other words, profiles that only looked at daily sessions. And then they were trying to figure out the various shapes and how they interacted from one day to the next. And they were missing the entire big picture. And they would develop an entire lexicon, their own language, and their own rules based around something that was incomplete information. So, in other words, they were like the cave dwellers looking at the shadows and based on what they see there, trying to reconstruct and paint in their mind what's really going on in reality. When the real players are playing at a completely different level, they care about all of the action because their pricing and their moves are based on that bigger picture.
Gotcha. Okay, that's good. That's good to know. I was just like experimenting with using the lower time frame profile, and I was like, yeah, it's marked up in the level here, and I'm gonna enter in at this bottom of this lower node here of the so-called new all-time high node, and it worked like a charm, but it only happened one time so far. So I was like, I wonder if this thing is even valid, but I had to ask you to confirm. So
Yeah.
it must have been just like an illusion. I'm trying to dispel that illusion if it doesn't
Well, so
exist.
there's no doubt that you could see some localized price action that's happening at that time, and it keeps on hitting off of a level, and it's creating a tiny little node for that day, and that's fine. But that's noise in the bigger picture. It's just noise.
While we're on the note of volume profile, I noticed like a couple of times we mentioned that we could use the volume profile for entries and exits. So I was wondering if you could show an example of like how we could use that as an exit. Will we just take it? Will we just close out the position when it hits the next level above, or is there a way to is
Well,
there a
we would
strategy?
use it in the same way that we'd use it. Let's say that we didn't have options and we were just trading stocks up and down, right? We would use it in the same way. We would anticipate that there would be support there. We'd see some evidence of support, and then maybe we would say, okay, I'm going to hold that position because I don't believe it's going to go beyond that support anymore. If it does go beyond that support and it's broken that, then we would release the trade. But if it is providing some support, that might give us additional confidence to hold on to that trade, to stay in it, because we're always making hold to fold decisions. Now, it's a secondary indicator because your primary indicator is all based on your risk management, and your risk management is really based on a probabilistic type of thing. So in other words, if you have achieved, say, $500 of profit and you're near the mid part of the day, let's say it's 1 o'clock, then you know that your tolerance level has shrunk from where it was in the beginning of the day, where you had a very wide tolerance. And so now you're in the mid part of the day, and so you've shrunk down your trailing stop or your tolerance, how much you're willing to lose before you get out. So let's say in the beginning part of the day, you've made like $200 and you've got a 50% tolerance level. You're allowing it to go all the way down to $100 before you get out. Now it's 1 o'clock and now you're up to $400. Are you still willing to give up 50% or $200? No, your tolerance level has shrunk down. Maybe now it's only 25%. So you're still only going to give up another $100. So if it gets down to $300, you're out. However, right at that $300 mark, if there is a significant structural level, let's say it's just below the $300 mark at $280, and price goes down and hits that structural level. Now it's a little bit beyond your idea of where your tolerance level was from a percentage point of view, but there's strong structural level there that's giving you confidence that it's going to hold. So you've modified your fold decision to a hold because there is something backing it up that gives you more confidence to stay in that trade. Does that make sense?
Yeah, that does make sense.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.